Kuhun, let me just interrupt for a second because we are actually getting the Bank of Korea's rate decision today. Oh, surprisingly, they have not cut the rate and they have left the policy rate unchanged at 3%. Today, senior Asia economist at Goldman Sachs joining us. Thank you so much for your time today. So what makes it more likely that we will see this rate reduction today and not in February?
Yeah, our expectation is that the majority of the MPC members to consider downside risk to growth to outweigh upside risk to inflation.
Tell us a little bit about the transmission mechanism for the economy and why the South Korean economy needs this.
Yeah, when you look at some of the early indicators for consumption, it was quite weak and subdued. We have some uptick in the export in December, but we think that's mostly coming from like a front loading of Korean export to U.S. before the start of next administration. We have seen similar things to Taiwan export in December as well as China. So that's more or less temporary uptick. So going forward, we expect a very tight fiscal policy or fiscal the budget for this year, which was passed in a hurry at the end of last year amid the political crisis. Also, the tariff risk, which would weigh on investment as well as export from Korea, would like to put the downward pressure. Our growth forecast is 1.8%, which is below consensus. So far, we are holding on to that, given the formation of the interim government and also the reduction of the the political tail risk. We have to see, however, how that play out, especially next week when the Trump administration start and they come up with the tariff measures.
Kuhun, I was really surprised to see the jobless rate surge so much for the month of December. Is that already because of sentiment being hit, especially with the ongoing political crisis, or were there some idiosyncratic numbers that really led to that labor market condition to deteriorate so fast?
Well, when you look at the trend of job growth,
Kuhun, let me just interrupt for a second because we are actually getting the Bank of Korea's rate decision today. Oh, surprisingly, they have not cut the rate and they have left the policy rate unchanged at 3%. This was really not foreseen by many economists. Only 4 of 22 economists surveyed by Bloomberg were expecting the Bank of Korea to hold steady, not cutting the rate to that 2.75% that was expected. So again, the Bank of Korea leaving the rate steady at 3% after 2 consecutive rate cuts. This despite the fact that we continue to see signs of perhaps a weakening economy. And as we were talking with our guest Kuhun, the political crisis also spilling over when it comes to the impact on broader demand. So Kuhun, first of all, give us your reaction to what the Bank of Korea is doing right now, given that you are also among those who, the majority who thought that they were actually going to cut. What could be the rationale here?
I guess they have probably more recent numbers, and maybe the numbers for Q4 might have been a bit stronger than they expected, or despite the weak sentiment data, maybe actual numbers not as bad. But in our view, going forward, we thought that it would be more prudent for them to cut and wait rather than not cut and then wait for the evidence of weakness. But obviously, that's their judgment. And the fact that they took so long, unusually long, for them to make decision suggests that it was a very close call. So we expect this to be dovish hold rather than hawkish or neutral hold.
Yeah, it's interesting when you take a look at swaps markets, traders were not pricing in any cuts at all. So if we assume that maybe this is also sort of the oncoming risk of Trump trade tariffs and the impact on South Korean exports in particular and the won, does that also suggest that we probably will see a cut in February? Bloomberg Economics was pretty 50-50 as to if it was going to be a January or February cut.
Yeah, I mean, we have been saying that the inflation has been trending down and the export has been subdued. And then on top of that, the political risk and also associated declines in investment. or broad economic activity would like to weigh on growth in a way to push Bank of Korea to cut as a precautionary rather than waiting until the evidence of weakening. But to the extent that they decide to hold, the rate seems to suggest that maybe they have confidence that strength of activity will continue, and then maybe they judge that ongoing political turmoil has been kind of ending with the political calendar kind of lined up until there is a new election, snap election, sometime maybe June. Yeah.
Household debt for the longest time has been one of the biggest sort of systemic concerns for South Korea's economy, right? With the loans coming down, obviously perhaps, trending in line with a loss of confidence amongst households. Do you see this as being a structural shift?
Yeah, when you look at the recent housing market data and the household debt growth, there is clear evidence that it has been going down. And we thought that the financial stability concerns of Bank of Korea, which was the main criteria when they decide to, the pace of the easing, looks like things are under control and in a way to allow them to cut the rate. On top of that, obviously, the Fed stance has been changed a little bit given very strong job numbers. Maybe that pushed some of the members to wait and hold. But we now view that the start of strategic hedging by MPS on the top side of dollar Korean won to protect their asset returns in Korean won would have allowed the Bank of Korea to be less constrained by U.S. monetary policy or rate differential.
And Huang, who's a senior Asia economist at Goldman Sachs. Really great to have you with us as we continue to get analysis on your Bloomberg. You can turn to for the BOK decision with that surprise hold after two back-to-back cuts. TLIV Go to get that commentary from our expert team of editors dissecting that news at the moment. We also